In this episode, we're talking about our trip back to Berkeyville.
Welcome. Thanks for everyone who's tuning in to watch this episode. Today we're going to be talking about our trip down. This is our second one down to the Berkshire Hathaway annual shareholders meeting. Really great time. Get to go down and hear from Warren Buffett, Charlie Munger, two of the greatest investors of all time, and always a really good trip. We learn a ton, and that's what this episode is about, bringing that information and knowledge that we've received from the meeting and bringing it back to you guys. Grant, why don't we start with your impressions of the meeting? We've been down twice now, 2017, 2018. Why don't you share with some of the viewers what your impressions are after 2 years of going down to the Berkshire Hathaway meeting?
Yeah, no, happy to. I mean, and again, I'm going to pose this question back to you because you've been with me both of those trips. But you know what? I'm always impressed with how open and transparent and the whole process is, the whole meeting is, because for most companies out there, most publicly traded companies, they have their AGMs, they have their shareholders meetings, but it's a big black box. It's a necessary evil for them. It takes them away from what they want to really be doing, which is in their business. Instead of that, though, Berkshire takes a look at this situation, says we have to do this. We're going to make a big event out of it, and we're going to bring in all these different shareholders, all these people, and we're going to make it a really fun time. We're going to make it educational. We're going to connect people, and we're going to connect people to their values and their vision, and that's fantastic. And I think more companies should do it, frankly. There's a lot of great companies I wish would do something similar to this, but frankly, what Berkshire does is absolutely outstanding, and the production around it, the events around it, absolutely amazing. But yeah, no, like I said, I'd pass it back to you.
Well, they call it the Woodstock of capitalism. It's a sight to see. One of my, I have two favorite parts. The first being they have a little bit of a convention area where all the businesses that Berkshire owns, whether that's Heinz, Duracell, Dairy Queen, NetJets, all these beautiful businesses that some may have never even heard about, these private businesses that they own, and you get to walk around and go to these booths. And when I say booth, it's done up. It's a big production. Yeah. So
you see what you own. I mean, it's amazing. That, like, again, the transparency about it. Like, you get to see the Duracell booth. You get to see Fruit of the Loom. You get to see all this stuff. It's amazing. Yeah.
It's really cool. And the second being the people that you meet. Everyone there shares a philosophy, an investment philosophy. But they share more than that. They share philosophy on the way the world and the economy works, worldviews. There's such an vast array of individuals there. You get up at 4 a.m. to go see these two gentlemen who are in their 80s and 90s, and you're standing in line with complete strangers, yet you just start talking to them and sharing information. Where you're from, what do you do, how many times have you been here, and that's honestly one of my favorite parts about the weekend.
Yeah, totally. I mean, the people you meet, I mean, some of the best people I've ever met have been at this meeting, and it's amazing the connections you make, the instant conversations you have. I mean, this trip alone, I met somebody who used to live in New York, now lives in Arizona, a lawyer. I met a family business owner, a couple who owns a family business from Melbourne, Australia. They sat next to me. Actually, we connected because I was just in Melbourne a few weeks ago. Just people from all over the world, China. They come here for this event. It's absolutely amazing.
Let's get into it. What insights did we learn that we can bring back to our clients and to investors?
Yeah, I mean, there's, I think, really two major takeaways, and I don't think this is anything new. Like, we read a lot about, like, Warren Buffett and Charlie Munger and their thesis behind investment, and so the lessons weren't necessarily new, but they were definitely reinforced, and that's always good too. So the two takeaways I had, the first one being that stock investments really work. It really does work, and it's worked for a long time, and it's going to continue to work for a very long time. And so, just seeing the power of compounded returns and owning companies, it's absolutely an amazing thing. And Warren gave his own personal stories, like from when he was a kid. You had the data.
Yeah, 1942, he was 12 years old. It was his first investment that he made, and he had to make it through his dad.
Yeah, right. So he told the story about his first investments, and he had the newspaper from those around the same day or the same day and what was going on in the world. But the key takeaway from it was, like, if you invested, just a small amount of money, let's call it like I mean, $10,000.
He used $10,000.
$10,000 in his example, and if you invested it from that point in a very mediocre investment, what he called a very mediocre investment, today it would have been worth about $51 million. So it's just like, even with a mediocre investment in a stock, in a company,
through all world events,
it made money, and it had this incredible rate of return. So just absolutely a powerful idea. I mean, they reinforce the idea that they buy companies. They don't buy stocks. I mean, they buy the business. So then they look at buying a stock like Apple or whoever else they're investing into these days. They look at it as if they bought the entire company, and they manage it the same way. So just really reinforced that for me. The other side of it was, like, they talked about the U.S. economy, and it's no secret Warren Buffett's a big homer for the U.S. He's from there, makes sense. But he's right. I mean, the U.S. economy throughout time has done amazing things. I mean, through these amazing events, like catastrophic events in some cases. Presidents being assassinated with Kennedy, Richard Nixon resignation, Cold Wars, hot wars, financial competition from Japan, now China, you name it. The financial crises, 2008, terrorist attack, like so many different things. And what happens? The U.S. economy moves on, and it just continues to chug along. And you see it when you're down there. I mean, we looked at a sleepy town like Omaha, a lot like Winnipeg, and it's amazing the ingenuity that people have, and this can-do attitude that the U.S. has. And I'm inspired by it, because I think, frankly, as Canadians, I wish we had a little bit more of that. It's amazing what you can do, and they have that attitude. So for me personally, I'm big on the U.S. economy. I think they've done well. They're going to continue to do well. And this isn't a short-term investment call, by the way. This is just a point that with that type of attitude, I think that you're going to do well. And the companies, they have some of the best companies in the world. They're going to do very well over a long-term period of time, long-term emphasis. But it's amazing to see it, and that exudes out of Warren and Charlie.
Absolutely.
The second takeaway that we have, that I took away from it, was about non-producing assets. In particular, they brought up, the question came up about cryptocurrencies. We knew that was going to happen. I mean, it's a big topic in the world today, Bitcoin, etc. And so they talked about non-producing assets. And the critics of Warren Buffett and Charlie Munger have said that these guys are old, they're not tech savvy, they don't understand it. But actually the lesson that they're talking about
nothing to do with the technology.
No, it's no different than what they've been saying for decades about precious metals and gold, silver. It's non-producing assets that they were talking about. So
a non-producing asset, and what they spoke about was, there is no way, you don't produce an income, there's no dividends, there's nothing to reinvest, to compound with a non-producing asset. So when you buy a non-producing asset, gold, Bitcoin, you are betting on that someone else is going to purchase that asset from you at a later date at a higher price, which you might be right, but you also might be wrong. And it's very tough to really know and understand what you should be paying for a non-producing asset.
Yeah, I mean, we call that speculating. There's investing where you can value an asset, and there's speculating when you can't. And the fact of the matter is, you can't value. There's no good way to value what the true value of Bitcoin is today. Just like there's no true way to value gold even. And so they become speculating at that point. And that's the lesson that they basically taught us again, is that Bitcoin is no different than gold in that respect. Obviously, there's technology involved with it, which is fascinating. I think they even said, like, the technology is fascinating behind it, but there's no way to value it, and therefore that's the reason why they've stayed away from those types of assets for the most part.
There we have it. Couple lessons from the Berkshire Hathaway annual shareholders meeting. I encourage anyone, whether you are a big time investor and you really follow stocks, you're into that type of thing, get down there, see these guys. They're getting up there in age. Or if you're a person who's just interested in business and interesting people with amazing stories, this is a really cool venue to go and meet like-minded individuals.
Yeah, I mean, one of the big things that I really like about it, aside from the business side and the investment side, is the philanthropic side of it as well. Warren Buffett and Bill Gates, two of the biggest philanthropists in the world throughout history, frankly. I mean, this is the kind of people that are attracted to this.
And
type of event.
they're there. Bill Gates was there.
So they're there,
He's
and
on the
people
board.
like them are there. It's a really an amazing thing. So if you are interested in coming down with us next year, please get in touch with us. We'd be happy to coordinate things. We'd love to go down with a group of people. So reach out to us. Visit our website, whitehoustonwealth.com. You can contact us through there, send us an email, and we'll be happy to coordinate that. And of course, for future videos, send us your questions. We'd love to answer more of your questions and take it from there. So with that, we'll close it off and stay tuned for the next episode. Ready?
Aim.
Fire.